Welcome back. In this episode, we'll be taking a look at Advanced Risk Machines, also known as ARM. It appears they had a successful initial public offering, so now's a great time for us to dive into this company and recover the facts. Now, I'm sure most investors are probably hearing of all the buzz surrounding ARM, so before you make any uninformed investments, be sure to get the facts first. So stick around. Alright, so we have a handful of new subscribers here, so I want to do a quick portfolio update and let you guys know what we do with this channel. So we're currently valued at $6.95 and we're positive with a 2.06 return, and we have $1.59 in earned dividends. Now what we do here is we invest $10 a day into high quality dividend growth stocks, and these are our current holdings. Now what we do on this channel is we like to start off with a quote of the day to keep things loose. So let's take a look at that. So what it reads is, the greatest wisdom is seeing through appearances. The greatest wisdom is seeing through appearances. That's by Atiza. And now guys, the quote of the day always has something to do with what we're going to talk about. So remember this. Let's get into ARM. So to preface what's to come in this video, I gathered most of my information from this F1 sheet, and the articles that I'm going to use, they also probably gathered their information from this because I cross-referenced it, double-checked it, and a lot of their information came from this F1. So these are facts that I'm going to be showing you. So what we like to do on this channel is we like to go through the good, the bad, and the ugly. And guys, you're going to want to stick around to the ugly because I have some absolutely astonishing news for you. I'm not just saying that to keep you guys around. I really find it interesting, so please stick around. I promise you that you will not be disappointed. So let's get going with the good. So the good for ARM is that their IPO price was 51. They opened at 56.10, and now they're currently at 63.59. They closed the day at 63.59, up basically 25%. That's fantastic, guys, okay? So now, if we go over to ARM's website, if you were 30 years or younger, you probably have had ARM in your life every single day, as they were born more than 30 years ago. So what does ARM do? They are the world leader in CPU technology, okay? GPUs, MPUs, they are the world leader. They are the architect, the engineer, they design the whole thing, okay? So this is a very difficult, they have a hard barrier to entry, okay? Now let's go down to their company highlights. I think this is impressive as well. This is another great thing for ARM. 70% of the world's population uses ARM-based products. 250 billion ARM-based chips shipped to date, and 99% of smartphones run on ARM-based processors. So these are all really great things. Let's get into the bad. So the first bad is the PE ratio, 168:10. That is so high, it's unbelievable. Let's compare it to NVIDIA, who I think is overpriced. Their ratio was at 110. So I won't even touch a stock that the PE ratio is over 40 or at most 50. They're quadruple that. So that's bad. I'm chalking that up as the bad. Let's go over and let's look at their income statement. Their revenue 2020, they were at 2 billion, 2021 2.7 billion, and then they went down in 2022. Okay, let's go over to their net income. 388, 549, and then they went down. So this is bad. This isn't good. It's not great to make less money, okay? And then we'll go down to their total debt, 219. That's not bad, but I don't love having any debt at all, okay? Obviously, all major companies carry debt, so don't discredit me on that. So now let's go over to more of the bad. So Rivian stock, they had a great IPO, okay? They had their IPO at $78, and then they closed it at $100. So they had a great IPO. But let's look at the pop effect, okay? Look at this. Rivian crashed. And I think that this is the last big IPO like this. So this is bad. This is very bad. They're at 23.10. They're at 24.11 right now. Okay, so they have absolutely tanked. So this is, I don't think, a long-term investment. Now let's get into the interesting stuff here. Okay, let's get into the ugly. Let's do the ugly. I love this article here. So it says SoftBank will retain nearly 90% stake in ARM. So the investors are only getting 10% of ARM. So I don't know what that's all about, but for you to only be getting 10% of a company as investors, I don't love that at all. I think there's something else. I think there's something more going on to this. There has to be something more going on to this. And the second part of this article, it says that ARM's business centers on designing chips and licensing the intellectual property to customers rather than chip manufacturing, for which it relies on partners. So they don't even manufacture the chips, right? They're not manufacturing them. They're just the engineers. So picture your house or your apartment, wherever you live. There's the engineer who designed it, the architect who designed it. There was a design team, and then the builders went and built it, okay? So picture that. And eventually, guys who are builders go on to themselves and they kind of just forget about the engineers unless they need stamps. But nevertheless, what I find interesting is that Apple and ARM have booked 80%. It says right here, Apple and ARM have booked 80% of the capacity of 5 nanometer processors from Taiwan Semiconductor Manufacturing Company. Okay? Now, if we go over to this chart, and this has been true for a while, guys, okay? 54% of semiconductors are produced by Taiwan, the Taiwan Semiconductor Company, okay? That is, I mean, half of the market is from Taiwan. So that's absolutely crazy. What else? We've seen in the news, China's going after Taiwan. China is going after Taiwan. Now, is this making more sense, guys? Why China's going after Taiwan here? Excuse me. Does this make more sense why China's going after Taiwan? Okay, now if we go over here to this article again, SoftBank is a Chinese company. Okay, SoftBank is Chinese. 54%. Now China wants Taiwan. So if they go to war, I'm not all that, I'm not all that happy that 80% of all of their chips, right? If we go over here, 80% of all of their chips are coming from Taiwan. So there could be some mix-up. So I think that this stock might end up going like this. There's a lot of ugly to this business here, the semiconductor business. There's a lot of ugly to it. Money rules the world. So you have to understand that. There's a lot of ugly to this whole business. Now, you might be saying, well, in the beginning of the video, I saw that you had Microsoft as one of your core holdings, and Invoo, Apple's Invoo. Well, yeah, I'm kind of screwed with Apple being Invoo. If, they go to war, China goes to war with Taiwan and something bad happens. But anyways, my defense for Microsoft, which is a huge holding for myself, is that their chips are made by Intel. Intel fabricates all their chips. Not all, but a majority of their chips in the United States. I'm not worried about Microsoft at all. So what we do here on this channel is we're investing in high quality dividend growth stocks. My opinion, which, in the last episode, about opinions, my opinion on this is, why would I invest in a company that is so new? Right? They're brand new, day one. Why would I jump right into this? I said it in the last episode. I'm not one to buy all the new, fancy, flashy stuff. Why would I jump right into this stock day one when I think the results are going to be this? There's so much, hovering over the semiconductor industry. Why would I invest in this? Especially when it's 168, the PE ratio is 168, the price is already 63.59. That's absolutely crazy. How can I invest in something like that? But again, I'm not a financial advisor. I want everyone to do the best, but you got to do the research into this stuff. This is a new company. Everybody's talking about it. What I think's happening here, truly what I think's happening here, is they went public because the investors are like, we want our money, we want the returns, let's fill our pockets. That's why, It tells you right here, guys. SoftBank owns 90% still. 10%, okay, let's get that 10% chunk and let's fill our pockets. It showed you right here on the company website, they've been around for 30 years. Why private for so long? Oh, now you're public? You want a little bit of money? I think that's what this is. I could be 100% wrong. As a matter of fact, I probably will be proven wrong. And if I'm not proven wrong, then we can go back to this video and I won't make another 2 years from now saying, boy, did I miss out. You know, I could make another video saying I'm wrong, just like what I would do for NVIDIA. I was absolutely blown away by NVIDIA. If you go to my old videos, I was blown away by NVIDIA. So I could be wrong, but that's just my analysis. Those are the facts. That's what I'm seeing. So you can take it with a grain of salt, or you can dive in and scoop up some shares. But either way, thanks for watching.